It's time to talk about your money and my money, because no matter how hard we try to leave 2020 in the dust, there's one lingering thing you need to get rid of before you can move on. Your 2020 taxes. Thanks to the coronavirus, a lot has changed for this tax season, and joining us now to break it down is the People's CPA, Sheyena Wilson. I love your title, the People's CPA. Thank you so much for joining us.
Thank you so much for having me, and good morning to New Yorkers.
I love it. I love it. Yeah, you have a lot of information for us. I want to start with stimulus checks. Some people got them, some people didn't. Regardless, do you have to pay tax on your stimulus check?
So that's a great question, and the response to that is going to be no. Stimulus checks are not considered taxable income. Instead, what they are is going to be a tax credit similar to the earned income credit or the child tax credit, where you can get this credit back in a refund, but you are not going to be taxed on it. The good thing about stimulus checks also is that if you did not receive a stimulus check in 2020 or early of this year, you can actually claim both stimulus checks or either or as a recovery rebate credit. Additionally, if you had a child last year or gained an extra dependent in another way, you can also claim the stimulus check that you would have received for having that child last year on your tax return this year with the recovery rebate credit.
The recovery rebate credit. So that is something that is easily accessible to us. Do we have to ask someone like you about this? How do we get our viewers to get to that if they need it?
So I would say your accountant should be sure be asking you whether or not you received a stimulus check. Because if you're saying no, we want to make sure that you are claiming that recovery rebate credit. Also, your accountant should be asking you whether or not you had any changes in regards to your filing status or dependency. Because if you gain extra dependents, you also want to make sure to recover that credit for those dependents as well.
Understood. Okay, so many folks got unemployment. They filed for unemployment in 2020. Is that taxable?
Currently, unemployment income is also taxable as well. However, over the past couple of days, they are discussing in legislation whether or not they are going to exclude $10,200 of that unemployment benefit that you receive. But for now, yes, it is taxable income. You should be looking for Form 1099-G in the mail, as we just saw, and that's going to report how much you received in unemployment benefits in a also be added to your 1040 as taxable income. But again, I would say for those who do have unemployment to speak to your accountant about holding off for a little bit, because some of those benefits may actually be excludable, which will allow you to have a lower taxable income and lower tax liability.
Oh my goodness, it's a lot, but we got to muscle through it. What about capital gains? For those who don't know what that is, explain what capital gains are, please.
Yeah, so I think we had a craze in terms of investing because of the whole Reddit thing that happened. But essentially, what a capital gain is when you sell an asset for a gain, right? So say, for example, I purchased an asset for $10,000, but now that asset is now $15,000. Well, when I make that sell, I now create what we call a capital gain transaction. And that can be created from selling things like stocks, crypto, or even your home. The good thing about capital gains is that you can use your losses to offset those capital gains, but those capital gains are taxed at a different rate. In the short term, your capital gains will be taxed at your ordinary income tax rate, which is going to be between 10 to 37%, depending on the total amount of income that you earn throughout the year.
Got it.
In the long run, capital gains will be taxed at either 0, 15, or 20%. So for those of you who have large amounts of capital assets, it may be more beneficial to convert those gains to being more long-term to avoid some of that short-term capital gains tax.
Got it. What about, I want to switch from capital gains, which for some people was great, to the businesses that got the PPP loans. Weren't they supposed to be forgiven, but perhaps weren't?
So PPP loans were forgivable last year, but now we're in a new round. So individuals who did not receive funding in the first round can actually reapply. Also, it's important to know that there are changes surrounding the PPP loan. Before, they were going off of net income, but now currently you can use your gross income to qualify for a PPP loan. So for those businesses who are still experiencing a decrease in revenue, whether it be quarter to quarter due to coronavirus, you can still apply for PPP and hopefully gain some funding for you and your business.
Sheyena, I want to bring in the team because we have some questions for you. You know, the only way I can square taxes, I always say to myself, okay, if I'm paying taxes, that means I actually did make money.
Right.
It's cold comfort. But Betty, I know you had a question.
It's a little bit of comfort.
Yeah.
But there's an additional tax credit, right, for children this year. Don't you get somewhere around $3,000 or more?
So you get a child tax credit for each dependent that you have that is under the age of 16 and the qualifying child. That credit is currently $2,000 per child. Individuals who also qualify for the earned income credit can get this child tax credit in addition to getting the earned income credit as well. So total credits can for sure exceed $3,000 depending on how many dependents that you're claiming and what your income level was for the 2020 tax year.
Yeah, there's a lot to wade through. And if you got a PPP grant, not a loan, you don't have to claim that on your taxes, right? That's just free money to you.
So not the PPP grant, the EIDL grant,
yes.
program administered by the SBA. But yes, so that grant income should be included in your business finances. So that is another separate loan, but you want to make sure that you understand the stipulations for EIDL separately from PPP because they're different programs. But essentially, if you have your books organized, it can essentially be, tax-free income to you, which is a great thing for business owners that need that additional funding.
Right, absolutely.
Sheyena, thank you so much. Great information, so much to sort through, but we appreciate your time. Thank you so much.
Thank you.